Welcome back to another episode of Pulse on the Market, the show designed to help you as an investor make better, more educated financial decisions. I'm your host, Jaden Vrains, president of Vrains Capital, and let's get right into it. So first, from a geopolitical standpoint, the Houthi rebels off the coast of Yemen, they're still causing havoc. They're still being menaces, targeting American and British cargo ships, and it's just been a disaster. More than half of all cargo ships have stopped passing by the Suez Canal, which is the canal north of Africa. And so how the majority of the cargo ships and cargo companies are reacting is they're passing by the southern tip of Africa. They're avoiding the Suez Canal completely, and this is affecting the global supply chain dramatically. The cost to ship things from place to place is getting so much more expensive. I believe it was around 2.5 times more money because of the amount of fuel alone it needed in order to transport these huge, heavy cargo ships. So this is not a good look for the program, and the Houthi rebels have said that they're not going to stop targeting American and British cargo ships, or just in general ships passing through the Suez Canal. And even though the U.S. has launched a few attacks on these Houthi rebels, they still continue to be menaces out on the Yemen coast in the Suez Canal. And yes, and also another geopolitical story is that 3 U.S. troops, you might have heard, 3 U.S. troops were killed in Jordan by an Iran-backed drone strike. That's sad. I'm honored by all the people serving in the U.S. and in the military. Sorry, it really is a true sacrifice, especially to be out there in Iran, Iraq, Jordan area. The U.S. military troops have all my respect, and I feel bad for the families too that have lost loved ones in these wars. But the U.S. retaliated in Syria and Iraq, and they launched drone strikes on 7 Iran-backed militia facilities to help deter attacks on American troops in those regions. And so this isn't looking too well with the Israel and Palestine war. Things are escalating, and it's not looking so well. And the last thing we need is another world war, right? Once the parties on both sides start getting involved, we could quickly escalate into another world war. Hopefully not, because in World War II, which was over 80 million, it started over 80 years ago, there was 15 million soldiers that died and 50 million civilians that died. That is terrible for the world in general. And so the last thing we need is another war. Like, imagine if we spend the entire military budget of the world on things that are actually productive. And I was reading into it, $2.24 trillion every year are spent on militaristic purposes every single year. That is so much money. Imagine if we relocated, repurposed this money for things that are actually useful. That would be nice. It's highly unrealistic, obviously, and history seems to repeat itself, but it would be nice, and we would see some huge advancements in the world. All right, back to a few stocks that I've picked out that have outperformed everyone this week, starting with Meta. They just had a huge day on Friday. They broke the record for highest market cap added to a company in one single day, and it was $200 billion with a B in just one day. That's what they added to their market cap. It is now at $1.22 trillion. And they've also hit their highest RSI, which is the Relative Strength Index, which indicates whether a stock is overbought or oversold. And it's the highest since 2013. That's crazy. That doesn't mean that it's going to tank tomorrow or on Monday necessarily, because there are many who believe the ability to become overbought is a sign of an underlying strength, since a stock tends to be trending higher when RSI hurdles 70, which it's now at 86, which is far higher than that indication. But I mean, the stock is trending, and there has to be an underlying strength to even get to that point, because they surpassed their expectations. Not sure who's coming out with these earnings reports, estimates, but companies like Deckers and Meta are just blowing past these expectations. And speaking of Deckers, they added $2 billion to their market cap. They went from a little under 20 to $22 billion in market cap. And the difference there, their stock went up over $100 too per share, and Meta went up around $80-$90 a share. But just the amount of outstanding shares in Meta is just so much greater than Decker's. People see that Decker's is like a $700 stock, and they're like, oh man, yeah, they must have a huge market cap. But no, it's just because they haven't given as many outstanding shares. They haven't split as many times as Meta, obviously. And the last thing for the stock market that I'm going to talk about today is the Taiwan semiconductor is just the semiconductors as a whole, and highlighter are NVIDIA, AMD, and TSM, which is Taiwan Semiconductor Manufacturing Company. And it's been going crazy. So semiconductors, first of all, in case you don't know, are an essential component of electronic devices. They help in communications, computing, healthcare, military systems, transportation, clean energy, and many other applications. They're super applicable to a lot of different things in the world, which is why they're so popular right now too. And America actually has, I think it's the best semiconductor production in the entire world, because they account for nearly half of the world's semiconductor sales. If you saw recently that NVIDIA got approved to send chips over to China under the condition that they basically dumbed them down. They had to make them a little worse before they sent them to China, which makes sense. And they're still super good semiconductors, but they had to dumb them down before they sent all of them to China. So NVIDIA went from 470 at the beginning of the year to 661 at the last close on Friday. That's a huge increase. There's a lot of people that are saying, well, NVIDIA already grew X amount of percent in last year, and there's going to be an overselling once the new year hits. But there's a slight selling, not really, and then it just starts skyrocketing up to 661. There's still a lot more juice in those boosters, and now it's 661. AMD, another semiconductor company, went from 134 to 177 at the last close on Friday. And TSM, Taiwan Semiconductor Manufacturing Company, went from 99 to 115. And so the semiconductor industry has been exploding. And there was a rough hiccup on Thursday. It wasn't too bad, or on Wednesday or Thursday. But now it's kicked back up in a full gear, and NVIDIA just smashes the markets yesterday. All right. And for the last thing of the day is Bitcoin. Well, it is crypto in general. So Skybridge Capital founder, his name is Anthony Scaramucci. He claims that once the Bitcoin halves, that the price is going to take off within that year. He sees Bitcoin soaring to at least $170,000 after the halving in April. And that's when the number of new Bitcoin entering circulation shrinks. So like the ability to mine Bitcoin gets cut in half. You get half the supply. And this happens every 4 years, roughly, give or take. And and so he is super bullish on Bitcoin. He thinks it's going up to at least 170,000. He said he was playing it safe with that estimation. He was being generous. He says that whatever the stock or whatever Bitcoin is trading at when we hit April, that you can multiply that by 4. So if it's at 50,000, he says it's going to hit 200,000 within that year. If it's at 60,000, he says it's going to hit 240,000. So he was playing it safe with the $170,000 estimate, but he's not the only one that's bullish on Bitcoin. A lot of people are bullish on it, and it makes sense why. It's data, it's historical accuracy or historical data, just how it's performed in the past. Doesn't imply that it's going to happen again, but statistically speaking, it's most likely. So if it just continues with what history has done in the past, then yes, it will happen again. And so that'll be it for today's podcast. It's short, it's a Saturday, and just a little brief overview on how the world's doing and how a few stocks are doing. But that will be it for today's Pulse on the Market. Once again, thanks guys for watching. If you have any questions or comments or anything, you can let me know. Just comment. I also have the podcast on YouTube if you can't comment on whatever podcast you're listening to. So just find a way to reach me through YouTube comments or whatnot. It's Pulse on the Market there as well. But here's a little disclaimer. I'll get this automated pretty soon here. But this podcast is for informational purposes only and does not constitute financial, investment, or legal advice. The content provided is based on the host's personal opinions and experiences, and listeners are advised to conduct their own research or seek the advice of qualified professionals before making any investment decisions. The host and guests do not guarantee the accuracy or completeness of the information shared, and they are not responsible for any actions taken based on the content of this podcast. Investing involves risk. It's all risky, and past performance is not indicative of future results. The host and guests are not responsible for any losses or damages that may occur as a result of investments made after listening to this podcast. Once again, thanks guys. You're the best. Please leave a good review. It helped me out a lot. And I'll see you on Monday.